Insight, and Abigail Doolittle here to talk a little bit more about it. Abigail.
Well, Romaine, let's talk about the SOX, because the SOX is underperforming the S&P 500 a little bit. We have all-time highs for the S&P 500 and the NASDAQ, but the SOX lagging. So one reason to pay attention to that is when you have record highs on major indexes, but not for one of those leading indexes, the chips, it could be a bear signal. It's what we saw in 2018. But I am guessing Alan Nuckman of BullseyeOption.com. I'm betting, Alan, that you're not too worried about the fact that the SOX hasn't put in a record high in a few weeks, that you think that perhaps there's some catch-up ahead.
Yeah, for me, I look at this as an opportunity. You lean on these levels, you look for stocks and sectors that have slumped or maybe stalled, and this is a great example. This sector, the SOX, is up 5% in 6 months, whereas you compare that to tech, is up 15, and the S&P, the broad market, is up 15% over this time frame. So it has some catching up to do, that's for sure. The highs were made 3 weeks ago, and it is 175% off its 2020 low. So it is a momentum sector that just for now, for whatever reason, the rotation, it's not hot, whereas some of the other parts are.
Yeah, that's an incredible gain over that time period for sure. And it begs the question of whether or not we have seen the peak of the pandemic chip cycle. What do you think, and what do you think it means for individual names such as AMD, NVIDIA, MICRON, some of the bigger names in the space?
Well, I'm very optimistic on technology, obviously. We've seen the NDX pull back many times. We've got 10% corrections, I think 6 or 7 of them in the last few years. And each and every time it's rallied back and made new all-time highs. So that sector went from not to hot. But you can look at some of these individual stocks. You mentioned AMD. AMD had this smoking run, but now it's 10% off the top. But the stock I like here is MU. MU is down 20% in the last 6 months, and it's at a key technical level of support. The halfway point for last year action of 45 to 95 is 70, and we've been trading between 70 and 90 here for the last few months with a super support level at that pivot, and a breakout here targets 80, and then the top of that sideways at 90.
Well, speaking of Micron then and liking it in that range, how do you play that range through options?
I'm a stock substitution strategy guy. I try to make it very, very simple. Instead of tying up a lot of money in the stock, I go with limited risk options, but I do it the old school way with in-the-money options that are going to act like the stock. So I'm looking at the 65 call for November. It's about $7 in the money, and it's got a delta of 80%. So it's going to act just like the stock. And a modest move in the underlying will produce a big gain in this option. So it's all about math and probability. It's got a high probability play. It's like being long from 65 with 3 full months of time. Look for this to have some recovery here. And like I said, get to that 80 and then go up to that 90 level to the top of that trading range.
Right.
From a risk reward standpoint, 70 is a critical level to lean on.
Yep.
If you look at that chart for the last few months and look at that on a weekly basis. And here recently tested the downside and then a reversal and a little bit of a breakout here that it can build on.
Great perspective. Alan Nuckman of BullseyeOption.com. Thanks so much, as always, for joining us for Options Insight. And from New York, and actually, Taylor, back to you.
Yeah, you know, Abigail, I'm going to take it over from here. Thank you, as always, there for Options Inside. We want to pivot to taking a look back into the markets, back into some of the technology stocks, and really, of course, what it means for Chinese technology stocks. Take a look at this. The K-Web ETF, of course, we've really been talking about for the last week or so, seen record inflows. Now, this is as of yesterday.